Hey Bowtie Nation, Joseph Hogue here, putting an end to the great wealth transfer lie that's been going on here on YouTube. You see these videos all over YouTube about the massive hand-me-down of wealth coming from the baby boomers, and it's funny because you see these mostly on millennials channels. Like, oh, grandma gonna make me rich. No, grandma is not gonna make you rich. Grandma's gonna spend that money on bingo and cruises. You're gonna have to make yourself rich. It is true that baby boomers have a massive stash of money, more than half of all wealth in the United States, about 62% or $96 trillion is held by the boomers and the silent generation, while millennials and Gen Z hold less than 10% of all that wealth. But there is still a very long time before that mythical wealth transfer happens. This year, the median boomer age is going to be around 65 years old, and using actuarial tables, we can see that they've still got 17 to 20 years left. That's still a long time and a lot of spending when you've got all that money. So if you're a millennial or a Gen Z, or hell, even a Gen X like myself, the best way to get rich is going to be investing in the stocks that are going to benefit not from the great wealth transfer, but from the great wealth spending by the boomers. I'm going to highlight 5 of those stocks, the best stocks to buy for this, and show you why you might want to avoid some of those stocks, those most popular stocks that the millennials are holding. But first, if you want to keep up to date on news like this, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to see. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign up link below. Back to our main topic though, and what got me thinking about this was a research note out by Bank of America analysts showing the increase in wealth gap between boomers and those younger generations. That survey found 85% of Gen Z and millennials citing barriers to their financial success, most importantly, a higher cost of living. And 73% said they changed their spending habits in the last year because of it. Almost half of these generations, 43%, are eating at home rather than going out, and 40% are spending less on clothes. But then a separate report here shows the massive financial upside boomers received in housing just over the last 5 years, while millennials and Gen Z got, quote, screwed. The median home price has increased from $322,000 to $431,000 just in the last 3 years. While just over half of millennials do own their home, the number is much lower, only about 24% for Gen Z, and much higher for baby boomers at 77% home ownership. And that has meant a huge increase in the wealth for older generations, widening that gap between rich old and young poor. For example, a boomer buying the median $322,000 house 3 years ago with a 3.25% rate would now be sitting on $166,000 in equity and monthly payments of just $1,261 a month. Millennials and Gen Z buying a home right now at rates that have more than doubled, and after the fastest rise in home prices ever, are looking at a monthly payment of almost $2,800 and what could be negative equity if home prices come down from here. But we're not done yet though. The income gap is also making boomers richer versus millennials. Data from the US Census shows us boomers get paid between 25 to 65% more than the average millennial across the United States, and there are some crazy gaps here in different states, like here in Florida where I live, where boomers make 52% more than their millennial counterparts. All this has opened up that spending gap between the older and younger generations. According to Bank of America credit data here, Gen Z spending declined 2%, while boomers increased their spending by 2.5% over the year to May. And again, for everyone waiting on that great wealth transfer, check out annual spending by generation here. At no point on this graph do you see giving or transfers or estates, maybe in that paltry 4% spending that we see here in the boomer bracket. Boomers are not transferring that wealth. They're spending it. Okay, that means taking advantage of this massive wealth accumulated by baby boomers. That means finding the stocks to buy and the companies that they're spending that $96 trillion on. And I found 5 stocks to watch. And for a first idea in that, if we look back at that spending graphic, we see the one place boomers are spending much more at is healthcare, spending 9.5% of their total spending here versus just 5.5% of spending by millennials. And few companies are better positioned for this than United Healthcare, ticker UNH, the largest health insurer in the United States, with medical benefits that cover 50 million members globally. It's also a leader in pharmacy benefits and health analytics, controlling a market share of 15% of all U.S. health insurance premiums. more than any other company by a wide margin. And this kind of vertical integration of the healthcare industry from insurance to pharmacy and services really gives UNH a unique advantage in pricing and profitability. Now, that advantage grew last year when the company was cleared to acquire health tech platform Change in a move that was initially fought by the Department of Justice but allowed by the courts. So with United Healthcare, you're getting a company growing its revenue by 14% a year with a unique advantage and perfectly positioned in this theme of boomer spending. Now against this, if you're looking at lower spending by millennials, you're going to want to avoid having too much in companies like Revolve Group, ticker RVLV, and internet fashion retailers specifically targeting millennials and Gen Z. I'm not trying to be ageist here, but it's hard to imagine grandma wearing any of this stuff. Another stock on the boomer bucket list though, Royal Caribbean Cruise, ticker RCL, because if you've ever been on a cruise, you know where the boomers are going on vacation. Those over 60 make up more than a third of cruise passengers, and the under 39 group is less than 34%. Now, I do like RCL over some of the other cruise stocks for its lower debt ratios and higher margins. The operating margin here of 30% and a positive net income versus a loss per share on Carnival and its operating margin of only 23%. Against this, another stock you might want to avoid is PlayStation maker Sony Group, ticker SONY. In a survey of the most popular brands by generation, the Gen Z and Millennial group put PlayStation at #1 for top of mind. That survey, called the Brand Intimacy Study, conducted by ad agency MBLM every year, studies which companies consumers connect to on a deep emotional level. It measures that connection through 6 needs, as well as the depth and intensity of that connection, really to find the most loved brands for each generation. And following that study, boomers love shopping at Costco, ticker COST, which was the 4th most loved brand for the group in last year's survey. And while the dividend yield isn't anything special on this stock, the share price produces a solid double-digit return on that stable revenue and sales growth. In that same survey, the younger generation seemed to prefer Target, ticker TGT, for their shopping, the 3rd most loved brand according to the survey. Shares of Target have given up almost all their pandemic bump, and sales are expected lower both this year and next. Next, though, Toyota Motor Corporation, ticker TM, has benefited this year from its reluctance to go all in on electric vehicles versus its hybrids. The company has also found a place in the hearts for boomers, coming in as 2nd most loved brands in that MBLM survey. Toyota sports profitability margins well above some of its U.S. counterparts, Ford and GM, mostly because it doesn't have to pay those higher union wages that were worked out over the summer here, and pays a 2.6% dividend yield. Now against this, if you're looking for some of those millennial stocks to avoid, Ford Motor, ticker F, is the most popular car brand with millennials, coming in at 5th most loved brand for that group. And while I do think shares of Ford are attractively priced here and could do well eventually on that F-150 Lightning, those recent union negotiations were brutal. The wage increases that these companies had to swallow just to stop those strikes are going to put Ford and GM way behind those non-union competitors like Tesla and like Toyota for years. I'll reveal that last group of stocks to buy and avoid next, but don't forget to take some of the stress out of your investing by adding some of these index funds I'm highlighting in the video here, a set it and forget it portfolio that makes investing easy. I recently highlighted Walgreens Boots Alliance, ticker WBA, in a video on upside potential for a sale. The retail pharmacy leader has just transferred the liability for its Boots pension plan, clearing the way to sell the franchise and turn this stock around. Walgreens tried selling Boots previously, but ran into trouble with that pension liability. Now with that transfer, it could stand to collect as much as $6 billion to pay down debt and buy back its shares. Walgreens is a top 2 market share company in its category with strong healthcare and pharmacy revenue, perfect for the boomer spending theme. Against this, shares of Gap, ticker GPS, have had a stellar year, but if millennials are slowing their spending, it could hit the company's sales and profits. I'm not saying grandma can't dress young, but there is nothing in here for anyone under 50 years old. Stay up to date with all the stock market news, trends, and strategies you need to see with the weekly bowtie, free with the link below. Or click on the video to the right for those 5 index funds to put in your portfolio for a set it and forget it investing strategy. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.